Good morning, everybody. Figured we start this off with a view of the ocean here. Can't see the sun today. Raining a little bit, but not stopping us from having an awesome day. Appreciate all of you for joining me on the Real Estate Walk and Talk here. Got a great topic. Yesterday, we did an episode of our Not Your Average Investor show, and we focused on, I think, the question that is most in the minds of investors right now, specifically those who are thinking about investing in rental properties. Should I invest today in rental properties, or should I wait it out? Because I don't know what's happening with coronavirus, right? So what I wanted to do is to empower people with real numbers and a framework for how you can make the best decision for yourself. So I've got this example. I brought the question to you guys yesterday. I appreciate all the feedback. I didn't give you the answers yesterday, but today I'm going to give you the answers. So here's the example. You're an investor and you've got $150,000 to invest. Now keep in mind, you don't need $150,000 to buy a rental property, right? It's much, much less than that. But that's what I'm using for this example because it's most applicable. So you've got $150,000 to invest and you can buy rental properties either using financing or cash, all right? And for this example, for financing, we're going to assume that the purchase price for these properties are $180,000. The rents are $1,350, all right? Your positive cash flow is $225 a month, and you're getting principal pay down of $178 a month. Just so you know how I built this example, don't worry, you don't have to know all of those numbers. I'm doing the calculations for you, all right? And if you have any questions about this topic specifically, I'm doing a live Q&A on Thursday specifically around this topic. It is there to break this down in more detail. So if you're somebody who's asking that question for yourself and you listen to this and you're like, that kind of makes sense, join me on the live Q&A. The link's in the description. You can go to jwbliveqa.com. It's spelled out, liveqa.com. And I will see you on Thursday for the live Q&A. All right, so we're breaking it down. We're gonna look at how much cash flow and principal pay down would you get if you invested today versus what prices may decline in a potential coronavirus situation and a decline in housing prices because of it, right? Before we go into this though, I wanna make a really important point. So I was investing prior to the Great Recession. I bought 40 rental properties in 2006, which was right before the biggest drop that we'll probably ever see in housing prices. And the reason that I bring that up is because I bought for cash flow. And I didn't buy based on what short-term housing prices were going to do. So those investments that I bought in 2006, I still own today. I own a whole bunch more. And they were great investment decisions because it was based on what was really hitting my bank account, right? What was a real cash event. So while we're talking about the potential gains here of cash flow and principal pay down, and then the potential pricing decline that some people may think may happen, just know that there's a real difference here. What's hitting your bank account, what real cash events really matter for buy and hold investors. What doesn't matter, and what didn't matter to me as the prices were dropping during the Great Recession, was what was on paper, what were my home values on paper, because I knew I was holding on to these assets for over 10 years, over 20 years. I still own them today, 15 years later, and it just didn't matter. So there's a huge premium, and if you're a buy and hold investor, all that really matters is cash flow and then long-term pricing, not short-term, long-term pricing. What you find is that markets, over a market cycle, real estate markets come back to their historical average appreciation rates, right? So hopefully, you know, that's just the first point. But some of you are concerned about prices dropping. So let's do this exercise and see how much prices would have to drop before it would make sense to wait. All right, I think this would be valuable for all of you. And thank you so much for joining me on the Real Estate Walk and Talk this morning. I see we have a few folks listening in right now. I appreciate all of you, and I hope this is valuable for you all. All right, so then when you break out the numbers here for financing, all right, when you break it down over 6 months for those properties, you know, this investor has that $150,000. That's going to turn into 3 rental properties. Run the numbers on it. Hey, good morning. Run the numbers on it. That'll come out to about $7,000 of gains from both positive cash flow and principal paydown. $7,000 on the plus side of really what actually happens in your bank account and your loan balance going down. All right, so that's what really matters. Now, what I went back and looked is probably the most relevant data point to prices dropping, which was the Great Recession. Now, I do need to make a point that the great shutdown that we're seeing right now from coronavirus, many agree that it is temporary, right? Which is very different than what the Great Recession did. So the effects of the Great Recession were caused by real estate, and many would agree are likely to be more severe to real estate. The Great Recession was more severe to real estate than the effects of the Great Shutdown, right? But it is a great data point because we can see sort of worst case scenario, what did prices really do for the first 6 months during the Great Recession? But note that there is a huge difference here. So I went back and looked from March 2007 to September 2007, prices dropped in Jacksonville 2.7%. All right. So now we know that that is sort of a real worst case scenario, the best relevant data point that we have as far as pricing decline in the short run. All right. So the numbers shake out. You've got $7,000 on the positive side if you invest today. Over the next 6 months, prices would have to decline 1.3% in that financed example before it might make sense to wait to invest. Prices would have to drop half as much as they dropped during the Great Recession. So hopefully that empowers you to know that, right? Now it becomes the decision of whether to invest or not is really based on how do you feel about, number one, hopefully you're investing for the long haul, right? Hopefully you understand that as a buy and hold investor, you should be thinking about cash flow, right? And you should be thinking about long-term appreciation. Shouldn't be thinking about short-term appreciation. But if this is still nagging you and you're saying, well, I don't know if I could buy the same property in 6 months for a lesser price, well, now go back and do the research and think about how you feel for coronavirus versus the Great Recession, right? If you think that pricing is going to drop half as much as the Great Recession, then maybe it makes sense to wait for you. But now you know. Now get this, we're gonna take it one step farther. If it's a cash purchase, all right, I was just talking about financing. If it's a cash purchase, the cash flows are higher, right? Prices would have to decline 3.3% over the next 6 months before it might make sense to wait. Over the next 6 months, it would have to decline 3.3%. That's 18% more than prices decline in the Great Recession, which many believe would have been more severe to housing prices than coronavirus. So if you feel that this is going to be 18% worse on housing prices, then you shouldn't invest in cash, meaning a cash purchase for that rental property. Is that pretty cool to know? Right? I think this is valuable information for you, for those of you who are thinking about investing, but a little bit concerned right now. This gives you those bumper lanes to be able to have real objective conversations with yourself, with your spouse, with those that help you make the best financial decisions. And now you know and are more confident about why you're making the decision to invest. All right, here's a special little nugget here. Well, two things, right? Number one, what I just shared with you might lead you to believe that buying in cash right now is the best way to go about it. I actually personally think buying with financing right now is the best, right? Now, why is that? I want to leave you guys with that question. I would love for somebody to put a comment and tell me why in this inflationary time that we are going to see, because so much capital is being infused into the economy, why would it still make sense to buy with financing today? Not saying cash is bad, but I think more long-term wealth is going to be created by those who take out smart debt to buy today. All right, so that's your homework. And then the other thing, some of you may be asking, hey, you know what, in this time, should I be concerned about rent collection? There's a whole lot to talk about that. Rent collection numbers are actually really strong. compared to what many people fear. And I'll share more and more of that information on Thursday's call. But even more than that, JWB is doing a mortgage guarantee, which means that for the next 6 months, for any new properties that are put under contract, we, in the event that your tenant couldn't pay rent for any reason, JWB is making a mortgage payment to all of those investors equal to the amount of their monthly mortgage payment as a way to remove that concern for you that your resident wouldn't be able to pay rent. It's just something that we're doing in coronavirus time. But you do have to put properties under contract by April 30th. So you got about 2 weeks. So that, and especially in this example, helps you know the numbers are real, takes that concern off the table, and should really help those investors who are continuing to add to their portfolios. So I hope this was valuable to you. Would love to hear your comments on why buying with financing today is still the best move, in my opinion. And I hope you have a wonderful day. Take care.